Welcome back to Investing Talk podcast. Lately I've been seeing all this buzz about Charles Schwab,
Oh, yeah.
ticker symbol SCHW.
Yeah.
They're doing pretty well in the market, so I thought we'd take a closer look today.
Yeah, you're right. They've been doing really well, not only like staying afloat with all the market volatility lately, but they've been thriving. Their Q4 2024 performance
Oh,
was
really?
really something else.
Well, let's hear it. What were some of the things that stood out to you?
Well, their net income was fascinating.
Okay.
It went up by a huge 76% year over year,
Wow.
reaching $1.8 billion.
Wow.
Earnings per share were $0.94, but even better, the adjusted EPS was $1.11,
Nice.
which totally beat what analysts were expecting.
Yeah, that's impressive. And how about revenue? Did they see similar growth?
Oh, yeah, for sure. They had a big increase there, too, 20% year over year to hit $5.3 billion.
Wow.
Shows they're doing a great job keeping clients and attracting new ones, especially with the market being all over the place after the elections.
Yeah, it definitely made sense. I can't ignore those record-breaking asset inflows.
Right.
Can you tell me about those?
So get this, for the entire year, they had $367 billion in core net new assets.
Wow.
That's huge already. But then you add in the fact that they pulled in a big $114.8 billion just in Q4 alone,
Oh, wow.
which is like a 20% increase annually. You know what that tells me?
What's that?
They've made themselves look really good for investors, even when the market's a little rocky.
So how'd the market react to all this good news?
Oh, they noticed right away. After that earnings report, their shares jumped over 6.3%.
Okay.
And if you look back further, their stock has climbed more than 25% in just the past year.
Wow. Sounds like investors are feeling pretty good about the future of Charles Schwab.
Yeah.
What are analysts saying?
Analysts are feeling positive, too. We're seeing lots of price target upgrades.
Okay.
Some are even raising their targets from $67 to $93.
Wow.
People are really excited about their potential.
That's great to hear. So let's look at this from a technical perspective. Where is their stock at right now?
Right now, as of January 27, 2025, SCHW is trading at $81.8330.
Okay, so for someone looking at that today, what kind of range are we talking?
Well, today it's gone between $81.18 and $82.47.
Okay.
But over the past 52 weeks, it's been between $61.01 and $83.35.
Okay, so it's pretty close to its 52-week high right now. There was a little dip of 0.25%, but it's still doing well. What about the volume?
It's a little lower than average today, 6,547,122 shares. Could mean a bit less activity overall, but we'll see.
Okay, good point. So what can you tell us about the moving averages for SCHW?
So the 50-day simple moving average, or SMA, is at 77.946 cents, and the 200-day SMA is at 71.71776 cents.
Okay.
The good news is that the current price is above both of those,
Right.
which usually means a bullish trend.
But we said it's close to that 52-week high.
Yeah.
Is that causing resistance?
That's a good point, because the 50-day SMA is a bit higher than the current price. It could definitely be acting as resistance. It's like a tug-of-war between the longer-term bullish signs and the short-term resistance.
Interesting. All right, let's talk about those key indicators. What can you tell me about the RSI, MCD, and the stochastic oscillator?
Okay, so the RSI, or Relative Strength Index, sits at 55.97, which puts it right in the middle. So it's not giving us a huge buy signal, but it's not bad news either.
Okay.
There's room for it to go up.
Right, so no big extremes in either direction.
Exactly.
All right, what about the MANCD?
Now this one's interesting. It's at negative 0.81 right now,
Okay.
which actually suggests a short-term bearish momentum.
Huh. So that goes against the longer-term bullish trend.
Yeah, a bit of mixed signals depending on how you're looking at it.
Okay, what about the stochastic oscillator?
That one's actually getting close to being oversold,
Oh, okay.
which might mean a reversal's coming. That's something to watch for sure.
Okay, lots to think about there. So tell me about the average true range. What's the volatility looking like right now?
The ATR is 1.61, which means things have been relatively calm recently.
Okay.
But, the market can change quickly.
That's true. Always
Yeah.
got to be ready. So what's the bottom line here? What would you recommend to our listeners?
Well, with all this in mind, I'd say it's a good time to buy, especially if you're looking at the medium to long term.
Interesting.
The stock is above those long-term moving averages.
Right.
The RSI is neutral, and there's definitely potential for things to go up.
So good for those who are looking to ride that wave of success.
Exactly. But a little warning for short-term traders.
Yeah.
That negative MACD could mean some dips soon.
Right. You got to weigh the risks and rewards.
Definitely. Now, if we take a step back,
Okay.
And look at what's been driving Charles Schwab's performance.
Okay.
We know SCHW is trading at $81.83 with that small 0.25% dip recently.
Right.
But remember, it's still hanging out near that 52-week high of $83.35.
Right. Way above the low.
Oh, yeah. Much higher than its low of $61 in one tour. Shows how resilient it's been despite the market going up and down.
Yeah.
Plus, its market cap is a solid $145.6 billion, which means investors are feeling confident.
It seems like those Q4 2024 earnings definitely helped build that confidence.
Oh, for sure.
They had $1.8 billion in net income, a 94 EPS, and a huge 49% jump year over year.
That's a big jump.
Huge numbers.
Yeah.
And then there's that revenue growth.
Can't forget that 20% year over year to reach $5.3 billion. Really shows they're doing something right.
Yeah, it does. And then the $367 billion in core net new assets they added in 2024.
Right.
$114.8 billion of that just in Q4.
It's really impressive how well they attract and keep clients, even with all the competition.
And new brokerage accounts are up 23%.
Yeah.
They're at 36.5 million active accounts now. It's like investors are putting their money where their mouth is.
Absolutely.
Yeah.
So looking at everything, SCHW stock is doing well, up 3.41% year to date and growing at about 20% annually. Plus, the technical indicators are generally looking good.
Okay.
And some price forecasts are saying it could go up to $90.02 by February 24, 2025.
Oh, wow.
That's a possible upside of over 10%.
There's always a but, right?
There's got to be something.
The fear and greed index is only at 39. Oh, really?
Which means investors are still a little cautious, even with all these positive signs.
That's interesting. Why do you think that is?
Probably because the market is still unpredictable and there are still some economic worries out there. Investors are trying to balance the good with the bad.
Makes sense.
Yeah.
Got to be careful. So let's talk about the good stuff. What kind of investment opportunities do you see with Charles Schwab?
If you're looking for long-term growth, I think Charles Schwab's a good bet. Their revenue and their strategies for getting assets are working. And they're not just sitting around being happy with that. They're focusing on digital transformation to get those younger investors who are all about technology.
That could mean even more market share.
So they're not just looking at their current clients, but thinking about the future.
Exactly.
Yeah.
They know technology is how you stay competitive in finance. They're not just following the trends, they're setting them.
Yeah, that's a good way to be. And that'll help as technology changes the financial world. Sounds like Charles Schwab is ready to adapt. Oh yeah, I think they are. They're all about innovation, and they know what their clients need. That's super important these days.
Definitely. So if you're looking for a company that's doing well now and looks good for the future,
Yeah.
Charles Schwab's worth checking out.
I think so. They've got a good track record. They're focused on growth, and they've got a vision for the future. All that makes them a strong contender in the financial world.
It sounds like we've covered a lot about Charles Schwab's performance and what we can expect going forward. Is there anything else you think we should highlight before we move on?
Yeah, I think we should talk more about their digital transformation. It's not just about adding stuff to their website or app.
Right.
They're completely rethinking how clients experience everything.
Why is that so important?
Well, it's really interesting. They're making finance easier to understand and use for everyone, especially the younger generation who want things to be digital and easy to use. They're not just keeping up with changes in finance, they're leading the way.
And that'll help them as technology keeps changing the way we handle money. It seems like they're prepared for that.
Yeah, I think so. They're dedicated to being innovative and understanding their clients' needs. That's going to be important going forward.
Okay, so for our listeners, what are the main things we've talked about today when it comes to Charles Schwab?
We started with those impressive Q4 2024 earnings.
Yeah.
Remember that 76% increase in net income year over year and those strong EPS numbers?
Those were some good highlights.
And then those record-breaking asset inflows, $367 billion for the year, with $114.8 billion in Q4 alone.
Yeah.
That shows investors see something good in Charles Schwab.
Yeah, for sure. And the market reacted well, too. The stock went up over 6.3% after that earnings report, and it's been doing well since.
Then we talked about the technical indicators, which look pretty bullish for SCHW.
Right.
Even though there might be some resistance along the way.
Yeah.
The overall feeling is positive. Analysts are raising price targets, and forecasts are predicting growth.
We also talked about the risks, though. Things like market volatility, regulation changes, and competition in the industry.
Right. But we also talked about their good points, like being financially stable, their focus on digital, and their position as a leader in the U.S. brokerage world.
So for investors looking for a company with a good track record who's thinking about growth and dedicated to innovation,
Yeah.
Charles Schwab could be a good option.
Definitely. But like with any investment, you gotta do your research and think about your goals and how much risk you're willing to take.
That's good advice. Okay, before we finish up this section, I want to leave our listeners with something to think about.
Okay, shoot.
Charles Schwab's growing, they're forward-thinking, and they're focused on what their clients need. Do you think they've got what it takes to stay on top in the financial world with all the changes happening?
That's a great question. It'll be interesting to see how they change and innovate in the years to come.
Okay, well, that's all the time we have for this part of Investing Talk podcast. Don't worry, though. We'll be back soon to keep talking about Charles Schwab and wrap things up.
We hope this was informative and interesting. Stick around for the next part where we'll go even deeper into Charles Schwab and what their future might look like. So, those record asset inflows we talked about?
Right.
It's amazing how much money they're attracting.
It really is.
Right.
It makes you wonder what's drawing all those investors in. Why Charles Schwab specifically?
I think it's partly because they have a reputation for being reliable, a safe place to put your money.
Right.
Especially with the market being so unpredictable lately, people want something that feels secure, and Charles Schwab's got a history of weathering those economic storms.
Yeah, definitely. People need that peace of mind, knowing their investments are safe, especially when things are uncertain.
Exactly. And it's not just about being safe. Charles Schwab's also been great at adapting to what investors want these days, especially when it comes to digital stuff. Their focus on technology and making things easy to use has really connected with people.
So, can you tell me more about that digital strategy? What are they doing that's different from other companies?
They're doing more than just basic online trading and account management.
Okay.
They've put a lot of effort into creating a smooth and intuitive experience across all their platforms, like their mobile app. It's super user-friendly, even if you're new to investing. And it's got all these features for experienced investors, too.
So they're trying to make investing easier and more appealing for everyone.
Exactly. And they're using technology to give personalized advice and recommendations.
Oh, wow.
Helping people make smarter decisions about their investments.
So it's not just about making things convenient, but also about giving people the tools to succeed.
Exactly. And it's working. You can see it in their client growth and those asset inflows.
Right.
They're bringing in a whole new generation of investors who are used to technology and want things to be easy to use.
It's amazing how they're staying ahead of the game in such a fast-changing industry. We talked before about how they're a leader in the U.S. brokerage sector. How does that help them?
Being a leader gives them a big advantage.
How so?
Well, they have the size and the resources to handle complicated regulations and adapt to market changes better than smaller companies.
So they're not just keeping up, they're setting the standard.
Exactly. Their size also lets them offer better prices and more investment options, which makes them even more attractive to clients.
Yeah, it sounds like they've created a pretty good deal for investors.
Yeah.
But there are always risks, right? What challenges do you think Charles Schwab might face going forward?
Oh, of course, no investment is completely risk-free.
Right.
One challenge is that there's more and more competition in the financial world. New companies are popping up all the time, and everyone's trying to innovate to get more clients.
So Charles Schwab can't just relax. They have to keep pushing and stay ahead of the trends.
Exactly. They need to keep investing in technology and good people to stay competitive.
And we talked before about market volatility. How could that affect them?
Well, when the market goes down, it can definitely hurt their profits because people tend to trade less, and that means fewer fees.
So their success depends on the market doing well.
To some extent, yes.
Yeah.
But they have a diverse business and a strong financial position, so that helps reduce the risk. They've been through tough markets before and come out stronger.
That's good to know. What about regulatory changes? Could those have an impact?
Yeah, the financial industry is heavily regulated.
Right.
So any new rules or changes to existing ones could affect how they operate and their profits.
Okay.
They have to be ready to adapt quickly and follow the rules, which means understanding those rules and being proactive.
It sounds like they're doing what they need to do to handle those risks.
Yeah, I think they're well prepared to face those challenges. But of course, investors should always stay informed and consider those risks before making decisions.
Now, before we move on, I want to go back to their digital transformation for a minute.
Okay.
We talked about how it affects their clients, but what about their internal operations and efficiency?
That's a great point. Their digital transformation goes way beyond what clients see. They're using technology to streamline their back office operations, automate things, and improve their data analysis.
So can you give me some specific examples?
Sure. They've implemented RPA, which stands for Robotic Process Automation,
Okay.
to automate repetitive tasks like opening accounts and processing trades. This frees up their employees to focus on more important things.
So they're using technology to make things more efficient and boost productivity.
Exactly. And they're also investing a lot in data analytics to get a better understanding of client behavior, market trends, and their own performance.
How are they using that data to improve their business?
They're using it to personalize client communication, optimize investment strategies, and identify potential risks and opportunities.
Wow, so they're making data-driven decisions across the board.
Yeah, they're creating a data-driven culture that's all about continuous improvement.
That's impressive and probably gives them a big advantage as the industry becomes more reliant on data.
I agree. Now, with all this talk about automation, we have to consider the human side of things. How is Charles Schwab managing the impact of automation on their workforce?
That's a good question.
Well, they seem to be handling it thoughtfully. They're investing in training programs to help their employees learn new skills and adapt to changing roles.
So it's not just about replacing jobs with technology, but also about helping their people grow with the company.
Exactly. They understand that their employees are valuable and they want to support them through these technological changes.
That's good to hear. They're not just focused on profits, but also on their people.
Now, before we go to the last part of our discussion, there's one more risk I want to mention: cybersecurity.
Oh, yeah, that's an important one.
As financial institutions become more dependent on technology, they're also more vulnerable to cyber attacks.
Right.
Those data breaches and system outages can really hurt a company's reputation and finances.
For sure.
So how's Charles Schwab addressing that threat?
They've put strong security measures in place.
Like what? Things like multi-factor authentication, encryption, and intrusion detection systems.
Yep.
They also do regular security audits and penetration testing to find and fix weaknesses. They're also teaching their employees about cybersecurity best practices to avoid human error.
So they're covering all the bases, both technology and people.
Yeah, they know that cybersecurity is a constant process. You always have to be vigilant and adapt.
It seems like we've covered a lot today about Charles Schwab's performance, their strategies, and the potential risks and opportunities they face.
We've explored their strong points like their financial stability, their digital capabilities, and their leadership in the industry.
And we talked about the challenges, too, like competition market ups and downs, regulatory changes, and cybersecurity.
It's been a really interesting look at a company that's clearly making a big impact in finance.
Now let's move on to the last part of our discussion, where we'll wrap up and share some final thoughts on what the future holds for Charles Schwab. Okay, so we've talked a lot about Charles Schwab in this episode of Investing Talk Podcast. We've gone over their financials, their digital strategy, and their role as a leader in the brokerage world.
It's been a good discussion. I think we've gotten a good sense of what makes them tick.
Yeah, definitely. So as we wrap up, I want to get your overall take on Charles Schwab as an investment. Is it a good opportunity? What do you think their future looks like?
Well, based on everything we've talked about, I think Charles Schwab's a solid choice for investors, both in the short term and long term.
Good.
Their recent performance has been excellent, and they're in a good position to keep benefiting from what's happening in the industry.
So what makes you so optimistic?
Their commitment to digital transformation is a big part of it. They're not just keeping up with technology, they're leading the way in a lot of areas. I think that will really help them as the financial world keeps changing.
Their focus on the client experience is important, too.
Yeah.
They're not just offering products and services. They're creating a personalized and engaging experience for their clients.
Exactly. That's what sets them apart from a lot of the competition. They're not just about transactions, they're building relationships.
And the financials are strong.
Right.
They've been making good money, and their balance sheet is healthy.
Yeah, that gives them the ability to invest in growth and handle any market downturns that might come along.
And being a leader in the U.S. brokerage sector gives them a real advantage.
Definitely. They have the size, the resources, and the knowledge to deal with complex regulations and changes in the market.
But we have to remember the risks, too.
Oh, yeah, of course.
We talked about market volatility, regulatory changes, and competition.
Right. No investment is perfect, and those things could affect Charles Schwab, too. But I think their strengths are bigger than their weaknesses.
Right.
And they seem to be good at managing those risks.
Their focus on cybersecurity is good to see, too.
Yeah, definitely.
They're taking the right steps to protect client data and keep their systems safe.
Absolutely. Cybersecurity is so important these days, and they're taking it seriously.
So are you feeling good about Charles Schwab overall?
Yeah, I think they have a bright future. They're well managed. They have a good track record and a clear vision. Plus, they're always innovating.
I want to go back to that question we asked earlier.
Okay.
Do you think Charles Schwab will stay on top as the financial landscape changes?
You know, I think they have what it takes. They're adapting to what clients want, they're embracing technology, and they're always coming up with new ideas. If they keep doing that, I think they'll continue to do really well.
I agree. It sounds like we both think Charles Schwab's a company worth keeping an eye on.
Absolutely. They're a great example of how to succeed in an industry that's changing all the time.
Well, that's all the time we have for today. We hope you enjoyed this episode of Investing Talk Podcast.
Yeah, thanks for listening.
We hope you found it helpful.
If you want to learn more about investing, be sure to subscribe to the show.
And don't forget to share this episode with anyone who might be interested.
We appreciate you tuning in.
And we'll see you next time for another episode of Investing Talk Podcast. Until then, happy investing.